U.S. stock markets opened the trading year for 2026 with a mixed and cautious tone, reflecting investor focus on lingering economic uncertainties even after a strong 2025 performance by major indices. The session illustrated both continued optimism and market hesitation as traders parsed the latest data and policy prospects. Mixed market moves at the opening bell. On the first trading day of 2026, the Nasdaq Composite showed modest early gains, buoyed by tech-driven optimism, rising around 0.2% in early trading before fluctuating. The Dow Jones Industrial Average lagged slightly, dipping roughly 0.3% after initially rising. The S&P 500, the broad market benchmark, also slipped below even, pointing to cautious positioning among investors. These movements came as Wall Street began the year after a third consecutive period of double-digit percentage gains in major indexes, a rare stretch not seen since the late 2010s. In 2025, the S&P 500 delivered more than 16% annual gains, while the Nasdaq outpaced that with more than 20% gains, driven largely by robust tech performance. Tech leads, but with a tentative start. Technology stocks, especially those tied to artificial intelligence, were among the more resilient winners early in the session. Leaders in the Magnificent Seven, including NVIDIA, Oracle, and Google, notched gains of more than 1% early in the day. Other big tech names like Meta, Microsoft, and Amazon also saw modest upticks, reflecting strong investor appetite for AI-capitalizing platforms despite broader volatility. However, despite these positive pockets, gains were uneven and did not fully sustain across the broader market into mid-session. Other tech-related stocks showed weakening follow-through, underscoring some investors' concerns about lofty valuations and stretched earnings expectations. Commodities and safe haven assets also move. On the other side of the market, precious metals like gold and silver continue their momentum from 2025, posting early advances as traders sought safety amid mixed equity signals. Spot prices for metals like aluminum also rose, partly influenced by supply constraints and global demand dynamics. These movements align with broader trends in commodities, where precious metals experienced some of their strongest annual performances since the late 1970s. Despite gains, challenges remain. Though 2025 ended with solid gains, Wall Street's early 2026 trading underscored a number of ongoing risks and considerations facing investors. 1. Mixed economic signals. A blend of stronger labor market indications and softer growth data has made expectations for 2026 policy decisions, particularly by the Federal Reserve, harder to read. The coming monthly jobs report and inflation data will be major catalysts for stock market direction. 2. Federal Reserve outlook. Rate expectations remain mixed. Many traders currently expect the Fed to hold rates steady early in the year, but there's growing chatter about potential cuts later in 2026, contingent on how inflation and employment evolve. 3. Policy and geopolitical uncertainty. U.S. policy decisions, from tariff debates to leadership changes at the Federal Reserve, are top of mind for market participants. President Trump's pending selection of a new Fed chair and tariff policy outcomes this month could significantly sway market sentiment. Outlook. Optimism balanced with caution. Despite the cautious opening, sentiment from market strategists remains broadly optimistic for equities in 2026 overall. According to analysts tracked by Bloomberg, forecasts generally project a potential fourth consecutive year of gains for U.S. stocks, though this view is tempered by concerns about overvaluation and economic surprises. Investor focus now turns to upcoming economic indicators, especially the January jobs report, Federal Reserve policy moves, and corporate earnings scheduled to begin later in the quarter. These will be critical in determining whether U.S. markets can sustain last year's strong performance into 2026, or if volatility will dominate the early months of trading.